With a changing market, investing success requires a clear strategy and a track record of performance. If you're serious about building a property portfolio, you need to speak with Lachlan Vidler and his team at Atlas Property Group. As a national finalist for 2022 Buyer's Agent of the Year, Lachlan and his team are ready to build and scale your portfolio in any market. Whether it's financial freedom or a more secure future, Atlas Property Group is here to guide and support your personalised journey. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good morning, good afternoon, good evening, whatever time of day you are listening. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby, and it's always a pleasure to jump on and get to speak with some pretty amazing people out there doing amazing things with their property portfolio and hopefully providing some insight into the rest of you as to how they've gone about it, give you some tips and tricks as to how you may be able to do it as well, and maybe some lessons learned as well along the way. It's always an experience, and it's an absolute pleasure to welcome back someone who it's now his third appearance on the show, giving us another little bit of an update. Aishwarya Kesarwani. Ash, welcome back. So excited to hear from you again. And I was pretty pumped when I saw your email saying you had an update for us.
Thanks, Grace. Thanks for having me on the show again. I had an update from about 6 weeks ago. A couple of changes in the portfolio. Yeah.
And we're going to get to that a little bit later. But if you do know the voice or you remember him being on a show previously, a couple of episodes that he has done is how this 24-year-old could make $250K plus from his first property, and also a flipping success, how this young investor renovates to his advantage. And that's probably going to give you a little bit of an insight into the way that Ash runs his property portfolio. But let's do a bit of a recap for people that maybe haven't heard that story, or, that was a little while ago for them. So talk us through, Ash, what was it that really got you thinking about property in the first place? Yeah,
definitely. So, I come from a civil engineering background, and what I really wanted to do was, generate wealth through property. So, I started off with renovating projects and, taking on properties that require some work. That's how I got into my first property. I sold that, and since that, I've really wanted to generate passive income and cash flow through properties. So I've been, buying and renovating and holding the property since then. So that's been my goal so far.
And that's been the goal since then, but has your strategy changed along the way? Have you learnt more about property investing as you've gone, actually, maybe, what I was originally thinking wasn't quite the best way to go about that?
Yeah, definitely. I think I started off with, trying to renovate and sell, but now I've changed more into a long-term strategy where I can, buy properties, renovate it and keep, so I can get that long-term cash flow and capital growth as well. Also for tax purposes as well. The longer we hold the property, the better it is. So, I think definitely that strategy has changed, and it's shifted more towards a long-term strategy of, buying and holding the property instead.
And we're going to jump into those properties in just a second and talk through the purchase of those. But I'm very curious too, because you've done this over quite a short period of time in the scheme of things, really. Has changing external conditions, say COVID, the market change, has that been what's having an impact on your strategy, or would you say it's more of an internal one for you?
Yep, I think definitely COVID and the changing interest rate more recently has definitely had a big impact on the kind of property that I buy and the location that I pick as well. So, let's look at 2020 April when the COVID first hit. So if COVID wasn't there, I probably wouldn't have bought the first property in Sydney, but, that definitely worked in my favor. And more recently, again, changing in interest rate has definitely helped me again buy another property in Sydney instead of looking at regional areas that I mentioned in February this year. So external factors has a big part on where we buy property.
All right, so let's go back to that first purchase then. We'll just run through it super quickly, give the numbers, and when was it you purchased that again?
Yeah, so that one, I bought it in April 2020 in Granville, close to Parramatta. It was about 620 odd thousand for that property. Needed some work. Took about 3 months to complete all the renovation on that, and I sold it in October 2020 for about 800 or 820.
Awesome result there. And so then that propelled you for those next purchases, didn't it?
Yeah. So as soon as I settled on that property, within 4 days, I bought the second property in Beverly Hills. I guess in the southwest of Sydney, close to the airport. So I bought that again for about $895. Needed a bit of work, and since then I've just held on to that property.
Mm-hmm. So tenants in there, obviously.
Yeah, the tenants have been there for about a year and a half or so.
Yeah, and it's positively geared, negatively geared?
It's positively geared, yes, already, but I've got plans for another secondary dwelling on that property.
Okay, and we'll talk about that in just a moment as well. But let's go to a break there. We'll be back in just a moment with more from Aishwarya Kesarwani. Welcome back to this episode of the Smart Property Investment Show. It's an absolute pleasure to be joined on the show by Aishwarya Kesarwani. And it's not his first appearance on the show, but I thought it was just worth giving us a little bit of backstory as to how we've got to this point where we are today. So that pretty much got us through to that second episode, didn't it? When you had purchased that second property and what was going on there. But obviously you wouldn't be back if you didn't have an update. So what's been going on since then?
Yeah, a couple of changes, as I mentioned. The first one is I bought another property about 8 weeks ago in the western suburbs close to St. Mary's. Ended up picking that location because of where, the future airport's going in and, good transport infrastructure in that area. Yep. So that's been my third purchase. Settled on that a couple of weeks ago, and, the tenants were there from day one. Yeah, that's been my third one.
So talk through the specs of that. Unit, house, number of bedrooms.
Yeah. So it's a corner block house, 3-bedroom, 1 bathroom. It's got a garage as well. Yeah, the property didn't really require much renovation. So, it was ready for, occupants to move in.
Mm-hmm. And so what is the plan with that property?
That one, I don't have any plans for now. It will just be, tenanted out for a couple of years until I could do a secondary dwelling on that property. So, that property would just be a rental property for now.
So that one as well has the potential to, build it out.
Yeah. So I was looking for a corner block because it will definitely be easier to, subdivide and make 2 dwellings on that property. Mm-hmm. So, again, that property was bought, with the thought that in the future something could be done with it.
And how much did you pick that one up for, Ash?
So that one, I bought it for $547.
Wow. Didn't know you could still get prices like that in Sydney.
Yeah, it was advertised for about $670. Started negotiating about $530, and then we met right bang in the middle at $547.
Wow. So that's what? More than 120 grand less than the reserve.
Yeah. So about 20% lower than what it was advertised. As I mentioned in the previous episode, buying well is quite important, especially to generate that long-term equity. So, and just required some negotiation at the end of it.
I'm shocked at how well that went for you, Ash, just considering, while we have seen some slowdown in the prices and obviously people are settling for less than the asking prices, that's still a sizable chunk lower.
Yeah, so I noticed that the property was sitting on the market for some time now, and I knew there was something wrong with it, or not sure why it wasn't really selling. So I decided to inspect the property. I noticed that, one of the bedroom was a bit small. It was more like 2 bedrooms and a study. Yeah, so you decided to make an offer on that. And the owner was also having a divorce. So I guess they needed to settle quite quick. So that's where, I mentioned that, I've got the funds ready. We could do this as soon as possible. So that really helped in terms of negotiation.
Very interesting. I think you're probably excited a lot of people right now who might start exploring the Sydney market again, because you even mentioned yourself that you hadn't been looking necessarily in Sydney for that next purchase. Yeah,
before the rate hike, I was looking more in the Lithgow and Blue Mountains region because of the price range. But, as I started noticing that the vendors were accepting discounts on the listing price, that's where I wanted to re-enter the Sydney market.
And pretty booming market out St. Mary's Way, as you said, a lot of infrastructure going in, and that's obviously all shaped your decision too.
Yeah. I think by 2026 we'll have the airport link as well to Sydney Metro to the St. Mary's region. So yeah, it's hard to go wrong with those kind of suburbs at that price point.
Has it changed sort of what your thoughts are now moving forward about what you're going to do next, given how well that kind of, I don't know if a gamble would be quite the right word to use, but to negotiate so hard and start so low and see it pay off like that?
Yeah, like there's no harm in making an offer. The worst that can happen is you get a no, but there's 50 other properties on the market. So yeah, definitely there's risk when you're buying a property, especially when in an environment where the rates are rising. But that's where you do your due diligence and buy below market value. So you do have some buffer when the market does go down.
And so, from that, where do you go? Well, actually, have you got it valuated since then?
Yeah. And it came back where it was advertised at about 660, 670. So, there's already been 100K equity uplift on that property.
Yeah. Well, I mean, I guess it's proof that a valuation and the market price may not necessarily be the same thing.
Yeah, no, that's definitely true. Yeah, there's deals to be had in this environment. Yeah, where the rates are rising and the vendors can get a bit panicky. Yeah.
So 100K of equity. What are the plans now to do with that?
I'll probably leave it at it, and then I'll just build the secondary dwelling on the Beverly Hills property. That's my plan. We just submitted to DA a proposal. So that's the next step in the portfolio, to build a secondary dwelling.
Mm-hmm. So with that secondary dwelling, you're going to keep the place of the residency that's already sitting there as is? Is it just going to be, a subdivision and then building back from there?
Yeah, so it will just be a secondary dwelling at the back of the property. So the front would already be tenanted. It's already tenanted now. So it will just generate additional income.
Mm-hmm. Yeah. And so what are the specs of the property that you're going to be putting on there?
Yeah, so it'll just be a 3-bed, 2-bathroom, 1 garage. And in that area, you could lease it anywhere around 500 to 550, being the premium suburb of Beverly Hills. Yeah.
Mm-hmm. That's pretty good going. You must be pretty stoked with how everything's turning out so far for you, Ash.
Yeah, I think definitely, as I mentioned earlier, the external factors have really been in my favor, since I started in 2020. So yeah, things are going well in the portfolio. Hopefully, once the secondary dwelling is in, I should have enough cash flow to buy another property in Sydney. So that would be my long-term goal for now.
All right. Well, I want to unpack some more of those long-term goals and what it means for you, where you're looking, where the diversification piece is too. But we'll do that just after a break. See you on the other side. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Ash Kesarwani, who has had a pretty great start in the property world, I'm going to say. It's been pretty inspiring, Ash, to see your journey to date. And I hope that people are listening along and thinking, maybe that's possible for me as well. And it does require a fair bit of proactivity on your part, but it's clearly worth it and it's paying off at the moment. So how big is the portfolio now? What are the actual figures on that valuation all up?
Yeah, so as I mentioned, about 2 properties now, looking to build a secondary dwelling. Combined value about 2.2, 2.1 million based on the estimation. And, it's generating about $1,000 per week in rent currently. Once we have the secondary dwelling up, it should be about $75,000 in annual income from the portfolio.
And that's pretty good off really 2 purchases.
Yes. I want to maximize the rent, of course, by building that secondary dwelling. And that would, again, be the case in the future if I was to build, another granny flat on my recent purchase. And, it is possible to generate 100K in income just through rents of 2 properties.
And you've been holding down your day job this whole time, haven't you?
Yeah, of course. Yeah, I need that to, I guess, service the debt and get a loan.
Yeah, good on you. I mean, how much time does it actually take out of your week to be doing all this property stuff on top of working full time?
I think once the properties are bought, it only takes about 2 hours of admin a week. But, when you're looking to buy or when you're doing your research and seeing houses, I guess takes about 5-6 hours a week just to attend everything and, check due diligence on those properties. Yeah. But now it's died down a bit since I bought that house, and the architects are just doing the DA plan. So yeah, it's been okay last couple of weeks. Yeah.
So I want to talk to you a little bit more, Ash, around what this experience has been like for you. Obviously, 3 properties is still fairly early on in an investment journey. It's only been a couple of years for you, but I do feel like, you're coming to this with years of wisdom behind you. What have been, some of your biggest lessons over the last couple of years when it does come to this property portfolio?
Yeah, I think for me, every property has taught me something. The first property that I bought, it taught me a lot about renovation and how to renovate to maximize value. Same with the second property, I was able to renovate that. And all along this way, I've learned a lot about, building a relationship with, real estate agents and all the other stakeholders involved, like, solicitor and mortgage brokers. So it's been really, a full cycle, I guess, which is full, still not complete, but, definitely lessons learned from each and every stakeholder involved and from each and every property.
Interesting that you bring up that you build a relationship with the real estate agents, because a lot of people, they just completely discount the real estate agent from that kind of experience. They don't necessarily trust them. They're probably going in hard against them. How valuable do you think it's been for you to be working with the agent?
Yeah, I think it's been quite good. So I've been in contact with all the agents, in the area that I'm looking to buy. And, I tell them my brief that this is my budget and that's what I'm prepared to spend for the right property. And if anything comes on the market, usually they'd contact me first, for an off-market opportunity. So yeah, definitely it's good to have, that first go or the first look at the property before it hits on the market. So building a relationship with the agents that in the area that you're looking to buy, I think it's quite important.
You'd be, I'm sure, seeing a fair few properties come across your plate then that you aren't taking up on. What apart from the 20% below market value kind of figure, is there anything else to you that you go, no, like that's definitely not something that I want from that next property?
Yeah, I think, as I mentioned, the price is quite important, being 20% below market value roughly. I always look to not buy on a very busy road because, again, for the future, I guess it wouldn't grow as much. I always look for close to public transport and a decent sized block. So at least it has some potential for the future.
Mm-hmm. And looking towards that future, I'm sure, given how young you are and how well you've grown that portfolio so far, you must have some grand plans in place.
Yeah, not I wouldn't say grand, but I guess modest. Probably 4 to 5 properties is my goal to have in Sydney. And if they are positively geared, I guess in the long term, 10, 15 years, they could pay themselves off. So that's been my strategy so far. Try and buy below market value, rent them out so they don't really hit your back pocket that much every month.
And why staying in Sydney for them? A lot of people are, looking to park their money elsewhere. And I know there's a lot of reasons for doing that, based on price and everything. So it's quite interesting to hear that you want to keep yours all quite local.
Yeah, so I think I guess I understand the Sydney market better than I would understand, Brisbane, but because I don't live there, of course. So I guess, if the properties are close to me, I understand them. If something requires fixing, I can always be there. But in the future, I might use a buyer's agent and, I could look into Brisbane or Perth. But at the moment, if possible, I prefer to do my own research and buy that way. But, I haven't closed down the door of a buyer's agent in the future.
I guess it's just something that you can be really flexible with and make decisions as you go.
Yeah, and I think if I have few properties in Sydney that have equity in the future, if I do want to buy in Brisbane using equity, that shouldn't be a big deal and that should be fine. Yeah.
And so then, the next 12 to 18 months, is that mainly going to be you looking at that second dwelling on the property?
So I should have the second dwelling ready by April. And once that's completed, I would be again in a position where I can start to look for another property. So by next year, June, I'd probably have my banking ready to, start looking for another property.
So these timelines are pretty quick that you're working to.
Yeah, I think one property every 12 months or 14 months. As soon as I'm ready, if I have the banking ready, I would try and look for a deal out there.
Mm-hmm. And you're not going to try and build this second dwelling yourself after all your success with the flipping of the first property?
I think second, that's quite a big so I definitely need a builder's license, which I don't have. So, I'll leave it to the good hands of a trusted builder.
Well, Ash, I'm really excited to see how this progresses for you again. Best of luck with that whole venture, but it already sounds like it's paying off given, how much, well, that's still the second property, but how much equity you've already managed to make immediately on transaction on that third property. And I think that's pretty telling as to how your forays are going into the market. So I can't wait to get the next update from you. And just thank you so much for jumping back on the show with us.
Thanks, Ray. Thanks for having me on the show again. Thank you.
To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. If you have any questions or you think you might make a good guest on an upcoming episode, reach out, editor@smartpropertyinvestment.com.au. As always, subscribe to our website, www.smartpropertyinvestment.com.au. and stay up to date with us on our social media, Facebook, Twitter, and LinkedIn. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Would you like the latest news and insights in HR, leadership and people management? HR Leader has you covered. Subscribe at hrleader.com.au.